So we're seeing bear market tendencies, although even though we're seeing those numbers now, we just had a huge rally in the market. Now today things are selling off again. We'll see if the previous lows hold, but clearly, and it's an extreme time in the market. But the big rally, 5-6% in the indexes last week, didn't really trigger any really big changes in the asset classes that would lead to better markets, essentially.
Yeah, I mean, I think the market we're in now is very volatile, both the upside and downside, and it's a very much event-driven market. We get these news comes out about the Fed or China lockdowns ease. News eases out, and then the markets like to pop off of that.
Jeremy Siegel from Wisdom Tree thinks we might not have a recession, but who knows where stock prices could go. And then Bob, B of A strategist Mike Hartnett, says he sees capitulation with money leaving every asset class. Folks are even leaving Apple and other stocks that have held up. So we are unsure on when this market will bottom. It might have bottomed, but usually when markets bottom, we find out about it after the fact. We'll only know if there's strength that's sustained. We rally, we retest the lows, rally again, retest those lows, and we start moving in a positive seesaw direction upward. That's when we know that there's a strong market again. And that's when that's enough evidence for us to get back in the market, where we're at maximum cash levels, maximum protection. So we wait and we watch, we see. We'll get more evidence. We'll report back to you on the moves we're making. And those who are 4-star clients, obviously, will see it happening in their portfolios for those who have the protection mode. But it has worked very, very well again this period where all of our risky asset portfolios are down less than half the market. We even have one portfolio, our dynamic model, which picked up the move in commodities. It was different than the 2020 market collapse where there wasn't a move in commodities, but this time because of oil prices and grains and other related commodities, that portfolio is up single digit, about 7-8% for the year. So many investors have not done near as bad as the market with us. And we think that the downside protection is the most important thing. You can destroy an entire decade worth of stock portfolio gains in one bear market down 40 and 50%.
Inflation slowing is hopefully a good sign. Obviously, it needs to slow a whole lot more. People are still feeling it, and it could accelerate, but hopefully it's peaked. The job market continues to remain strong. Employers had an estimated 11.4 million job openings through late May. So still an extraordinary amount of jobs out there. The unemployment rate remained at 3.6%, which is right near where we were at right before the pandemic hit, which was 3.5%. So the job market continues to be really strong. We're seeing some good signs of inflation slowing potentially, and spending has been up. So there are some positive aspects of it.